Thanks. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, these volatile markets, what those new credit concerns might mean for this record-setting rally. We discuss and debate with the investment committee. Joining me for the hour today, Bryn Talkington, Steve Weiss, and Jason Snipe. We will take you to the markets here. Again, a bit of a volatile morning. Dow still positive, as is the S&P, and the NASDAQ is basically flat, is what we'll call it. But we do have these credit issues which are hanging over the markets. I think everybody at this point recognizes that. The key questions at this point being, are they idiosyncratic and overblown, or is this something more widespread? The cockroach issue, as Jamie Dimon suggested this week in saying there usually isn't only one. We're trying to figure out, investors are, I think the markets are, what other issues are there? We've been talking about this on this show for the better part of the last 3 weeks, since September 24th. That was when the FT ran a story. We'll show you a little tear from that, just to bring you up to date on how much this issue and how long it has been kind of bubbling to the surface. September 24th, we saw this. Since then, take a look at the performance of alts managers, which have really been in the center of this until this week when you started talking about regional banks, and we'll get to that in a minute. Alts managers since then. Ares is down 22%, KKR is down 20, Blue Owl down 15, and Blackstone down 14. These so-called BDCs, the business development companies, are down. They're publicly traded vehicles focused on direct lending and private credit. The Ares one is down 6%, Main Street Capital down 11, one of the Blue Owl ones is down 8, Sixth Street Specialty Lending down 8, Blackstone Secured Lending is down 5. Now, with all that, I turn to Bryn Talkington, who is here on our set today, and we're happy to have you from Texas in person at Post 9. You've made the argument on this show, when we've discussed it lately, that the issue is overblown. You have decided to buy Ares Capital, ARCC, and Blue Owl Tech, OTF, if you're playing at home. The Blue Owl Tech is a vehicle that invests in AI-related plays. The tech one is. Tell me why you decided to do this now, when there's still a lot of smoke around, and in some cases it's hard to see through it to know if there are any flames anywhere.
Yeah, well, so first on Blue Owl, we're investors in the private company. We know the Blue Owl team very well. I think that for investors, as everyone's been talking about Tricolor and First Brands, first of all, with Tricolor and the comment about cockroaches, I mean, just calling balls and strikes, JP Morgan, I think, took a $500 million hit from the revolving warehouse facility of Tricolor, and other big banks had a lot of exposure to First Brands. And so I think in the credit markets, credit's always risky, and underwriting standards, I think, is what the question is on Tricolor and First Brands specifically. Now, as it relates to these publicly traded BDCs, first of all, they don't trade with a ton of volume. But as investors, these companies have quarterly earnings, and these, I think, Ares comes out October 30th, and then I think November 4th for Blue Owl. You can go on, look at their website, look at their investor relations, pull up their last earnings, and look at the summary of investments and see with Blue Owl, all 198 discrete tech investments. They really do more software, by the way. They do across the tech stack, but they're more focused on software lending. And you can see exactly who they have loans with, what the yield is. And so I think in terms of transparency, this private credit narrative, I think, is a very broad brush of a heterogeneous asset class. And so with both of these, I can get about a 10% yield. They're both trading between like 10 to 8% below book value. I think a year from now, I can look back and have a 20% total return in an asset class that I know I have complete transparency in both of these BDCs.
So Weiss, I mean, I want to know, how concerned you are about this. This seems to be a far greater issue on underwriting standards being more of an issue than just with First Brands and Tricolor, that there was such high demand for leverage loans, which were, the demand was at issuance was at a record in the third quarter, that to meet the rush for the demand, underwriting standards were lowered to get the loans, so to speak, out the door.
Right.
And now we're seeing a little bit, when the tide goes out, who's got a bathing suit on and who doesn't.
Right.
In some cases, the tide hasn't fully gone out yet, so we're not really sure who has what. The market is kind of guessing a little bit. Maybe it's broad brush, as Bryn said, but it seems to me to be too minimizing it to suggest that it's only related to the 2 bankruptcies that we've talked about already.
Right. So, and the knock-on effect, just to add one more name to the ones you put up on the screen, Jefferies. Jefferies, because of their first branch exposure, that went, when they had a good quarter, stocks trading around 70, and now we see that it's 51. They'll be fine. They know how to underwrite risk very, very well. But look, I'm not worried about another issue like 2008 with the banks. But when you're talking about private credit, it's not regulated. So the standards, the capital, the loan loss reserves, all that, you just don't really have those standards there because, again, it's not regulated. So you have to know, as Bryn does, who you're partnering with, right? Because some firms are driven by the fees that they're generating because they're asset managers. That's their business, generate fees. And so they will take some of those loans, package them up, and then they'll sell them to mutual funds, pension funds, retail investors, et cetera. So the point is that we don't know where the tide is right now. We know that we're seeing some signs that are heightened because we also have the consumer that's under pressure. So if you're lending to consumer businesses, odds are, like the subprime lending, auto lending that you referenced, you may have some problems. So I'm cautious on it. I don't see a huge issue here, but I agree with Jamie. It is never just one incident or two. So I think could it underpin the whole market? Surely it can.
Just because they're publicly traded, and as you suggested earlier, you're getting a look as an investor where the loans are going and to whom. That doesn't mean that the loans themselves still aren't risky. By nature, loans that are made, in the private credit and private loan market are probably more risky than they are if they're made by the big banks, because the firms who need the loans are forced to pay a higher interest rate to get the loan, and their balance sheets probably aren't as pristine as companies who are borrowing from the big banks, which is why they've had to go in the private market in the first place. Is that fair to say?
I think that's a narrative. I would say
a narrative? Isn't that fact?
No, I think you have to go back further, that the banks were doing this lending for decades. Yet the banks, what they did is, we all lived through the great financial crisis. If we want to talk about leverage, the bank take our bank deposits that we get, and they have to, a 10% that they have to keep, and then they go make loans across the country, lever those up, and that's what got us in this crisis. And so the banks have not been able to make these types of loans. On top of that, the regional banks have been in their own kind of recession because they had all of this real estate that they are now asset managers and can't get off their balance sheets to make new loans. And so I think the private credit market really over the past 15 years have just evolved, and it's been a first call versus the banks used to be the first call. You do have to go back with what Steve said, is you have to know the underwriting standards. And so with Blue Owl, they have very stringent, what's the EBITDA of Klarna? What is the EBITDA? What is the growth? So they are not willy-nilly making these loans. And so I think that me as an investor, no, I'm not making the loans myself, but I have a very high level of confidence in the firms. Like, people have confidence in JP Morgan's underwriting ability. You have to have confidence in these private companies' ability to underwrite loans.
But people would have had that same confidence, and not in any way to suggest that this is another crisis waiting to happen or it's systemic in any way. People would have said the same thing around 08 and 09. Well, people have confidence in these firms and their ability to manage leverage, and to know that the loans that they made, and to know that they were sliced and diced again, and this, that, and the other, until everything blew up. And you're like, well, how didn't they know?
No. These firms are like 1.5 to 2 times leverage. The banks were like 50 to 60 times levered on their balance sheet. It is not an analogy to compare the bank's leverage of 60 to 70.
I just said I wasn't making a comparison, but the notion that, well, they would know, I'm not so sure. I want to hear from you, Jace, because I haven't yet. I mean, you do have some exposure here through Apollo. You own Blackstone. What do you think?
Yeah, I think for me, so there's a couple of things. You know, as I kind of look at this shift to private credit, and this has been going on for years in terms of the demand, what we've seen. Part of it is regulatory shifts that we've seen since the GFC, and obviously where interest rates have been. And then I look to credit spreads, which obviously have been very tight, and there are folks that are obviously looking for yield. So if there has been some loosening up of covenants and some loosening up on just general lending standards, yes. I mean, sometimes there's some flies there, and then you have Jamie Dimon's comments on loop. Right, and I think if you kind of widen the lens and think about where the market multiple is, you know, we're trading at close to 23 times, and the Nasdaq is trading at close to 28 times. You know, we are susceptible to headline risk. So I do think, you know, to make a greater point that this is a idiosyncratic story. I don't think there's broad-based contagion here. I think where banks are largely, I think it's hard to extrapolate this issue here to some of the larger institutions. You know, so for me, I think this is an issue not necessarily that we should ignore, but I do think we should make note of it. But I do think 6 months from now, we won't be talking much about it.
You know, can I just come at it from a different way?
Just be quick, because I want to bring in, you know what, hold your thought.
Okay.
All right, hold your thought. I promise I'll get you guys back. But the regional banks are in the epicenter of some of the concerns for the last couple of days. Now, they're bouncing today, but there were several yesterday that had sizable losses. One of the key questions with all of this, too, is what's the Fed thinking and how might it influence what they'll do at upcoming meetings? There's like 100% chance of a cut in October. There's a 100% chance, I think, for December. And now there's a 60+% chance for the first meeting of 26 to be a cut as well. Maybe the market's looking at all of this and thinking that, well, the Fed's hand is going to be forced. Steve Leisman, our senior economics reporter, is here with more. Is that the correct way of thinking about this, Steve, that the Fed's taking note of all of this, and if anything, it's just going to force them to be a little more aggressive on the cutting cycle than they otherwise potentially would be?
It could be if these fears play out in the worst ways. But let me do a little backup here, Scott. I think a couple things you want to understand is the first is that by definition, the next credit event happens in a place you weren't looking at it. Kind of also by definition, supervision has a certain inertia to it. We learned that in the SVB blow up, which is that they weren't looking in the right place. So you can't be 100% sure. That said, the New York Fed actually what's today, the 17th? They put out a paper looking at these non-bank financial institutions, and they say that it's possible in an extreme economic event for it to affect the economy and the banking system. But a lot of what I'm reading, Scott, is that it's not big enough, really, to have a dramatic effect. Going back to the first thing I said, if we begin to find out that what's been moved into the shadow banking system, like we found out in the great financial crisis, has connections back to the banking system, that would change the game.
You wanted to say what?
Yeah, all I was going to say was that if you take a look at where rates were for private lending, you go back a couple of years, they were 22%, 20%. Now they've come down to about 10%. Prime is at 7.25. Prime Plus is what you lend at the banks is closer to 8. So when you take that and you look at it, what it means is that there's been way too much capacity to lend. And when that happens, there's less capacity because your rates are half what they were to protect your portfolio. So you just have to keep that in mind, how much they've gone into riskier and riskier assets.
Last word.
And the point is, like the Goldman analyst that you said, that said it's one big system, right? It's not two systems. If you look at the high yield market,
this was the Goldman
right.
COO.
Oh, so, okay, not just some guy. Sorry, I just forgot his name.
Not just some random person.
Okay, so even more important, that if you look at the high yield market is on the other side of private credit. It's showing no signs of stress. And so that to me is what's so curious, is that the high yield market spreads are so tight, but yet in private credit, where there's this opacity in quotes, is where all the trauma is, when the reality is Tricolor and First Brands were mostly bank issued debt holding it. So I just think there's a lot of confusion here, and people are just pummeling the illiquid BDCs that have low volume and are easy to push down.
All right, so I think we surrounded that story. Thank you for doing that. All right, so let's squeeze in a break. We have a big move to tell you about from Bryn. We will do that after this break. Tim Cook went to China. We'll discuss that as well. We got a block of moves to tell you about. This one surprises me from you, Weiss.
Yep.
Because you own this stock for as long as I can remember.
Yep.
Bank of America. You sold it.
I did sell it.
Related to what we were just talking about?
No, actually, not at all, because I'm not worried about, as I said before, the big banks in the least.
Well, why would you sell this one?
Well, here's why. Because number one, I'm looking to reduce my exposure overall to the market. I'm still pretty fully invested. I also have Goldman Sachs, and that is a core position. It's a very large position. So what I get in B of A that I'm not so sure I want right now is more of the general consumer population versus what I'm isolating on is the underwriting cycle, IPOs, investment banking, et cetera. And I get that with Goldman. So this had really just very little, despite what I just said, to do with the company, almost nothing. It was really just an exposure in the portfolio issue. So I just said, do I need to double down on financials? Because I run a very, non-diversified portfolio.
Okay, so we got that one. Now, this other one, Bryn made people a lot of money in this stock. Since you first started talking about it, the chart, you can refresh our memories on IonQ, which you sold.
Yep.
No longer in it.
Nope.
It's up 50% year to date. The chart's interesting, obviously, to look at over the course of the last 10 months.
Yeah.
Right? Why'd you get out of it now?
So I actually bought it last quarter after listening to their earnings call, which I listened to a couple times. You need a dictionary because you're talking about qubits and things like that. These are research companies, whether it's IonQ or D-Wave. These are research companies. IonQ, I think, is the best. They continue to buy, I would call, research teams that are doing really cool stuff. But I'm telling you, these are very long time before this company makes money. I think that these stocks have caught hold by a lot of viewers on X. They become momentum plays. And so when I buy one of these companies, I'm buying it to make money. And I bought it in the 30s. I sold it at 70. And I'm going to take my toys and go home. And if it comes back down, I will buy it back. Because I do think the quantum computing is a really interesting technology. But I'm telling you, it's 5, 6, 7 years out. And these stocks make no sense on any valuation metric that you could even remotely find.
Amy Raskin bought this stock a long time ago. She really made people a bunch of money because the stock in the trajectory of her ownership is unbelievable. All right, so we're past that. You trimmed Apple.
I did.
Tim Cook went all the way to China, and he comes back, and you trim the stock. What's up?
I did, Scott. So listen, Apple's been the eye of the storm with the kind of tariffs discussion all year. But the stock has jumped since August, up about 20%. I think they're, in some ways, and we talk about this a lot, a victim of their own success. Replacement cycles are approaching 5 years. They had a really strong quarter this past quarter. But for me, I think the real run is going to be next year on that. Then demand's been good for the iPhone 17. ASPs are going up. iPhone Air and the Pro have obviously gone up $100, so I think that'll be accretive for the stock. But as I look forward, I think the real opportunity is when they really start to focus on Siri, which I think they'll start to solve soon, and Apple Intelligence going forward. And I think that iPhone 18 next season will be the one.
Steve Kovac's with us now because, as we said, Tim Cook was in China. iPhone goes on sale there, and by all indications, the early numbers are good because they sold out.
Yeah, that's right. That's the latest headline we got out of China during this trip that Tim Cook was taking, Scott. So that's the iPhone Air. It was actually delayed several weeks because, long story short, there was some kind of regulatory issue around the new kind of SIM card technology they're using. It's on sale today and already selling out, according to reports over there in China. And by the way, the iPhone 17, the cheapest one, the base model, has also been selling like crazy over in China, in part because of those subsidies. So what did we see from Tim Cook this week? Well, he goes on these tours quite often, a couple times a year, usually around these iPhone launches. He's promoting the iPhone 17 lineup, of course, but also playing a little bit politician. He met with some commerce officials over there and promised some more investment in China, but no specifics there. We didn't see anything like we saw Trump a couple months ago give to President Trump. No golden trophies, no promises of hundreds and hundreds of billions of dollars of investment, things like that. It's very vague because at the same time, you have Cook working the other side of the equation to bring less assurances on China and reliance on China for the supply chain. We talk so much about India building more iPhones bound for US, and then all these new gadgets that are coming out, excluding the iPhone, are being made in Vietnam. So that's what we're looking for here. And in 13 days from now, Scott, we're going to get earnings. We're going to get our first official look at how this iPhone 17 lineup is performing. To Jason's point, there's a lot of excitement next year, not just because of the series stuff, but also keep in mind, Apple has shown this in this cycle, people can get excited about new hardware. That folding phone could be a big hit in the making too, Scott.
All right, can't wait for the earnings and all the talk around that.
Me too.
Steve, thanks. There's so many different parts of this market that have been moving, including Bitcoin, which is above 105,000. You want to, and by the way, the related assets to the move are all down week to date. Riot, Coinbase, Robinhood, MicroStrategy. You've got Robinhood, obviously. What do you make of what's happening here? Is this just a de-risking move?
We were talking about shadow markets earlier, and if you want to talk about shadow markets, there's an incredible amount of leverage in cryptocurrency. And when Trump announced the tariffs again on China, I think it was October 10th and 11th, that you actually had the largest one-day auto liquidation in crypto is $19 billion. That's really, if you put a chart, I think the beginning of where you started to see unease. These auto liquidations just automatically occur at the different, we'll call them custodians. And so I do think this margin level, people have to watch that. You can find sites to see that, but to me that started it. So now you have to find a technical bottom. And I think just as momentum is starting to be questioned, Bitcoin's clearly going to be on the correlated side of lack of momentum.
You just stay with what you have?
Yeah,
No moves, whether it's the IBIT, Grayscale,
well, with
Bitmine.
Yeah, well, BM&R, I love selling calls against that. There's so much volatility, and so I think if you don't have calls, you can still get 10% call premium for selling like 10% out of the money calls on Bitmine. So that's the way I'm going to play that and just get that income while the asset class continues to be volatile.
Why is that? I assume you're sticking around or what?
I'm sticking around. Look, it's not a big position at all, but and it's smaller now than it was a couple of weeks ago. But what you say underscores it. And look, I still don't know what the use case is, but I own it because I still think there's momentum that's going to come into it over time. President Trump, it's a large part of his net worth. So I'm hanging out.
All right, quick breaks. All right, let's do this move I told you about from Jason Snipe. You bought more IBB, which has been on a roll. 52-week high yesterday for both the XBI and the IBB. So tell me about this.
Yeah, it's up 15% year to date, obviously 35% since the April lows, but this is a subsector that's been under the mat for quite some time, so it's nice to see some price action there. So a couple of things for me. I think one, Big Pharma, they really need to rebuild their pipeline. So if you think about a story like AbbVie, who lost the patent for Humira, which was 25% of their revenue a couple of years ago, now you see Skyrizi and Rinvoq rolling. So I think there's going to be some M&A operating in the biotech space, and I think that's going to benefit the IBB, and especially some of those smaller names.
Well, you own AbbVie also, just to be clear, right? Yes. You still own that name.
I do, which has been a great performer as well this year. So I just think there's going to be some M&A action. I think part of it is the macro deal flow will kind of come back online in that space, and I just feel like the IBB will be representative of what's going to happen.
I don't want to miss hitting American Express with you because you own that stock too. They had earnings which were good. What do you think?
Yeah, I mean, listen, very strong quarter. The new Platinum card was very accretive to earnings this quarter. EPS was strong, revenue growth was strong. The consumer continues to spend on lodging and flying around, so they cater to the higher end, and I think that speaks through in their earnings release.
All right. We will do finals after this quick break. All right, welcome back. We should talk about gold because we haven't yet today, and it has been, as you know, a big story. It's at $4,200 an ounce, so it's down a bit. Freeport reports next week. I bring it up because Bryn owns it, and it was upgraded today to a buy. The target 43 to 50 from 43. Excuse me. It's 30% above its 200-day moving average. Is gold? It's the widest spread since 2006. What do you think?
With Freeport, we've got to see when that mine in Indonesia is going to get back on, and we want clarity. I think until we have clarity, I don't think Freeport can break above 45.
All right. Tesla reports next week. What do you think?
We already know the numbers.
You haven't been that positive on this stock lately, that's for sure.
No, because I think I'm pragmatic, right? I said I wouldn't buy it when it was at 460.
Right. That's what I mean.
It's like,
that's what I mean.
I'm here to make money. right? Not fall in love with the stock.
Hey, I'm not being critical of it. It's a matter of fact. You
Yeah.
have not been
Yeah.
all that jazzed up about it lately.
I think that the new car is nothing. I think China continues to be competitive. I think from a price perspective of the stock, I think it's going to take more than just new car sales to get this stock above 460.
All right. What's your final trade while we have you?
Okay, for my crypto friends, BM&R, buy BM&R here. You can sell the November 55 calls. You get 10% or $5. And if it gets called away in November 21st, you've made 20% in a month.
Okay, thanks. And good having you here
Thanks.
in person at Post 9. Jason Snipe, what do you have for us today?
I like AutoZone here. Same store sales were up 70 bips. They opened up 304 new stores this year, and I think they'll continue to open up more in 26.
Weiss.
FTA Aviation, clearly it's in the right sector, but I'll tell you it's a bit risky because the chart's not looking great, so support.
All right. I'll see you on Closing Bell with Tom Lee, Doug Clinton, Adam Parker, Brian Levitt. Welcome back. Despite the return of volatility this week and fresh concerns over the credit market, stocks are still pacing for a positive week. Joining us now is Tom Lee. He's FundStrat's head of research and a CNBC contributor. It's good to see you joining us from the nation's capital today. So what's your take on everything that we are talking about now daily?
Well, I heard the earlier segment, Scott, and I do think I'm kind of more in the Jamie Dimon camp, you know, that, and Steve Leisman's point that there's opacity in private credit, and that's the problem that investors are going to grapple with for some time. And I think that, along with the trade tensions and, you know, the VIX spike, is the reason investors are a little cautious. But I don't think that's going to change that markets still have a lot of tailwinds into year end. And part of it is AI is like, I think demand is accelerating there. And we know that investors are sitting on a lot of cash, and institutional investors are really having a terrible year. Only 22% are beating the benchmark. So I think there's a bit of a chase. And then sentiment has flipped negative, which is always a contrarian buy signal. So, you know, I think despite this mounting wall of worries, including the shutdown, I think it sets us up for a pretty good rally into the end of the year.
It sounds, though, like this is enough on your radar that do you think it's at least changed the game in the near term for the market?
On the private credit?
Just overall, I mean, if there are continued issues in private credit and the leveraged loan market, then the stock market's not going to take that well. I mean, you wouldn't think.
Yeah, I mean, Scott, the only thing that I don't know is how many chapters it's going to take to play out, because, you know, I mean, there's opacity, which is what is scaring people, but then there's real credit deterioration, which I don't think that's what's happening, and I think that's why Adam and all those had called it idiosyncratic. I'm kind of in that camp because high yield spreads have behaved. So I think it's more of is the flow of capital, because I think one of the biggest sort of allocations for alternatives has been private credit. It's going to make investors pause that, you know, maybe this market it's not as easy a return as it looks.
You told me, I think, a couple of weeks ago that 7,000 on the S&P by the end of the year was realistic. You still think that we could get another 5%? That's what it looks like. It's 5% between now and then. Do we have that in us?
Scott, I mean, 5% is just an average fourth quarter from 1950 to 2024. But we have the Fed easing after an extended pause. So that's 1998 and 2024. So I think that 5% might be the base case. I bet you it's going to end up being more like 7 or 8% or even possibly 10%. So I think 7,000 is the low end of what we can end the year at.
Wow. And how much do earnings have to do with that?
I mean, earnings are going to matter, but, you know, it's been a good start. I mean, we're barely into earnings season. The banks have been good. 82% of companies are beating. There's a lot more visibility of demand and then less concerns about tariffs because we're kind of working our way through it. So companies have a better sort of visibility over the next 12 months. I think the outlooks are going to be good, and I think that's going to help stocks. And, you know, I think there's a lot of room for multiples to still expand. So I don't think this market's that demanding.
I think it's interesting that you suggest that you'd be a buyer of regional banks and small caps. Why are you willing to do that? That's not putting your toe in the water. That's like putting the bathing suit on and jumping in. Why?
Well, I mean, Scott, I know there's a lot of muscle memory for people from 2023, and that was because of a big change in rates that really caught a lot of banks offside just in their business model. That doesn't mean that this crisis, which is underwriting being done properly, should have the same issue. So I think that there has been a throw the baby with the bathwater out on the regional banks and the small caps. So yes, I think despite the fact that the Russell had a rough week, I think they're really going to be one of the beneficiaries. I mean, even on earnings basis, small cap earnings are going to grow 48% in the third quarter. That's like 4 times, 5 times bigger than the S&P. So I think there's still a lot of growth left there.
What's the message in crypto right now, Tom? Bitcoin is down today. It's 107,000 right now. What's going on there?
I think there's a couple of things. One is there was a big deleveraging last week because that VIX spike and the tariff headlines triggered the biggest liquidation and deleveraging in crypto ever in history. So I think that people are still licking their wounds. And I think that there's also a bit of gold envy because, as you know, gold has been a huge performer this year. In fact, there's people waiting in line to buy gold. So I think that there is a bit of like, I'd rather own gold than crypto. So I think this is not the top of the crypto cycle, but I think levered longs in crypto are near record lows. So I think it's kind of like we're at the basement and working our way back up.
Okay. We'll see if we get there and if we're walking or taking an elevator. Tom, thanks. Enjoy the weekend, Tom Lee.
Thank you.
Hello and welcome to Blue Cloud Trading. That was Tom Lee. We also saw some clips from the halftime report earlier today. It is Friday, October 17th, and it's really late as I'm recording this video. It's around 9:42 p.m. Eastern Time, but we're going to go into what happened today in the markets. It was an interesting day. The Dow Jones was up 0.52%. NASDAQ also closed up 0.52. That's interesting. And the S&P 500 closed up 0.53. Russell 2000 down 0.67%. Let's take a look. And by the way, here's what we're going to cover, folks, real quick. Let me just show you. We're going to take a look at the index ETFs, like the Qs, the FEZ, which is Euro stocks, S&P 500, Dow Jones, Russell 2000, the VIX dropping quite a bit today. We're going to take a look at about 19 stocks and ETFs, a mixture here of stocks and ETFs that were covered, that were talked about, discussed on the halftime report. We're going to take a look at, we're also going to take a look at Tom Lee's Bitmine Immersion Technologies, Inc. He's the chairman of that company. We'll look at that one. We'll take a look at Tesla, Apple, and Meta. We'll look at some of the strongest sectors. And then we'll take a look at Robinhood. Okay. One of our members' requests. So here's the deal. We first need to take a look at the heat map. Okay. And here's what happened today. You can see Oracle down 6.93%, Broadcom down 1.36%, Eli Lilly down 2.02%, but the majority of the stocks were actually up. The consumer defensives did pretty well. So did companies like Tesla and Apple, Google and Meta. The strongest sector, by the way, here's an interesting thing. Let's take a look at the ETFs. Check this out. Today was a really bad day for gold and gold miners. Check out the gold miners ETFs here. Like GDXJ was down 7.69%, GDX down 6.76%, GLD down 1.88%, silver down 4.43%. Crypto, a lot of the crypto ETFs were down. Very interesting, right? And then I just want to go back here to this is world. How did the world perform today? Well, you can see the different countries, country ETFs. And then here is, let's go back real quick to the S&P 500. And I just want to show you the 1 week performance. This is what it looked like at the end of the week. All right. So, yeah, Google was up 6.86, Tesla up 6.24, Broadcom up 7.61. It looks here like a lot of the insurance property stocks didn't do so well. And some of the stocks over here that you see. But Bank of America and Wells Fargo was up. Look at that, 7.29%. Citigroup was up 3.34. Walmart up 5.78. Home Depot and Lowe's were up a little bit. You can see those values right there. All right, well, let's get into the indices here. First, we're going to start off with the Qs. You may already, if you're been watching this channel, you know that we're using the Ichimoku indicator, which is going to help us identify the strength of the trend. What we're looking for is for price to be above these moving averages. The green line, which is the Tenkan-sen or 9 period, the Kijun-sen, which is the red line, 26 period, highs and lows divided by 2. It's the average, basically, of the last 26 periods. In this case, daily chart that we're looking at right now. You're also looking for looking at that Chiku span. That's the white line, which is today's closing price projected 26 periods ago. We want that white line to be above the candle 26 periods ago. We've got the Senkou span A, which is part of the cloud. That's the top part, the light colored blue line. We want that to be above the Senkou span B, the purple line. All right, the bottom part of the cloud that you see here. That means it's bullish. And ultimately, we can tell the strength of a trend based on where price is in relation to all these. We want it to be above all these moving averages here, and it is. Qs were up 0.66%, and it looks good on the daily and on the weekly. Still holding up above the moving averages here on the weekly too. So we've got double confirmation. And when we have double confirmation on 2 time frames, the weekly and the daily, okay, these ETFs or stocks will earn a blue flag, all right, that you see right there on the left. So the Qs have it, and so does FEZ, which is the ticker symbol for the Euro Stocks 50 ETF, up 0.29%. And as you can see here, yesterday it briefly got underneath the Tenkan-sen, but then popped right back above here. So it's looking pretty bullish. The ADX, which is part of the, down here, the secondary indicator that I like to use, ADX and Directional Movement Index. ADX is moving up while the positive DI is still above the negative DI. So that's bullish too. Let's take a look at, that's the weekly chart, and here's the daily chart. All right, so you can see that it's looking pretty good here for the Euro stocks. What about the S&P 500? Well, it was up 0.57%. Yesterday I talked about how I felt we were almost building like a pennant type pattern here, and it still hasn't been broken. Do you see what I'm talking about right there? Its price has been squeezing in to this consolidation stage here, and we have yet to break out through it. So I would say still be cautious here. Just because we were up 0.57% doesn't mean that this is, we're off to the races. We had that big down day last week on Friday, October 10th, right? And we still haven't cleared way either to the upside above that candle or below it. We're still in between. And so as long as we stay in that range, we're just range bound, basically. We're consolidating. The Dow Jones doing something similar. DIA ETF up 0.48% today, but we recently had a negative crossover, the faster moving average, the green line crossing under the slower one, the 26 period. So, same thing. I'd hold off a little bit here. I wouldn't be ultra bullish quite yet in these markets. The Russell 2000 showed more weakness today. It showed weakness yesterday. As you can see here, it closed under the closing price from Wednesday. And now we had another day where it dropped under the 2 moving averages and under this 244.46 level. This level here is based, whenever I color a trend line like this purple, it represents the monthly charts. So if we go back in time, we can see it's based on this candle, a monthly candle from November 30th of 2021. So the reason it's important is because that's the last time we were there. We came back here as well and tested it back on November 29th of 2024, and then price dropped. And here we are stalling once again, okay? We're getting closer and closer to the end of the month. Will we be able to break through that 244, or will we still stay underneath? It's a little bit concerning. The other thing, if you look at this monthly candle, all right, we got a wick here at the top that's kind of like getting a little bit longer, and that's not a positive. That represents selling. And so when we look at that weekly chart, You can see it's been stalling here. We've got a shooting star type candle. That's not a very bullish candle. So yeah, here's that daily chart again. I'd be very cautious with the Russell at this point. I know Tom Lee likes it, and maybe this thing will take off, but right now the technicals, folks, are not confirming that. All right, so just keep that in mind. The VIX, a positive thing that happened today for the VIX, it actually dropped 17.9%. That's the volatility in the markets, the fear index, they call it. So that's a positive. It did spike up a little bit early in the day, right? And then it dropped. So that's interesting. The thing is, it's still above the Ichimoku cloud. So I wouldn't be, and it's still above the 200-day moving average. So I wouldn't be too gung-ho here and think that this is the end of the volatility that we've been experiencing. Monday could be a completely different experience. We'll have to wait to see what happens. All right, now, these are the stocks, a mixture of stocks and ETFs that were talked about on the show. Okay, there's a whole list of 19 of them. We really don't need to spend too much time on these, and I'll tell you why. Because the Ichimoku, which stands for at a glance, will kind of tell us the strength of each. I'm going to focus on why I feel like these three ETFs, GLD and IBB and AXP, look bullish, and why the rest not so much. And we don't really need to spend too much time, okay? Here's a daily chart for American Express. Today, it had a really good day. It was up 7.27%. It broke above the two moving averages. You can see here that the Chiku span also started moving straight up. The volume bar was twice the amount of volume today, right? That we've seen in the past since yesterday. And it just looks pretty bullish to me. Now, the problem here with American Express, however, is the fact that we're going to, you can see this prior high from September 23rd, 2025, 349.19, came up to it, and then there was a little bit of selling that started happening. Let's look at the 5-minute. All right, so there's that trend line, and you can see that we came up to it, and then it started declining. So that's not a really ultra bullish situation on the last 5 minutes of the day. I know that people are taking profits, but it didn't end strong, basically, is what I'm saying. Now, let's take a look at, and by the way, that's the daily chart, and here's the weekly. All right, so it's stalling at that level. So that's not a proper buy place. I would wait until it breaks through that. It needs to break through that next week at some point, and maybe even close above that level. Gold on the weekly chart. I mean, look at this multitude of weeks here. Many, many weeks where we've been just going sky high, right? Moving up. See that wick? That's a little bit concerning. Now, this is a weekly chart you're looking at. And yes, the volume's been moving up nicely. Here's a daily chart. So today we got something called a bearish engulfing pattern. Now, it's not 100% going to lead to something really bad yet to gold, but it's possible. Let me show you guys what that pattern looks like on the cheat sheet. We've got a candlestick cheat sheet here that we can use, and this is going to show you basically what it looks like. So we're looking for under the bearish column here. Okay, what we're looking for is this, the bearish engulfing. It's when you have a bullish candle here, followed by a larger red candle that engulfs it. Okay, and when you've got that, it can be a problem. It can be it could lead to a potential drop. There's a higher probability on Monday that gold could pull back a little bit more. Look at this big volume bar. It's almost twice the volume from the prior day. Negative volume, down 1.88%. We're still above the moving averages. Overall, it's still we still are in an uptrend. But I'll tell you what, I did take some some profits in some of my gold stocks today. I'm still holding on to some stocks that are gold stocks, but decided to take some. And if you want to find out about which stocks are in my portfolio, you may want to consider becoming a member. Before we continue here, let me just show you guys how you can do that real quick. Just go to my Blue Cloud Trading page here. All right. There's a few ways that you can support this channel too, by the way. You can subscribe. All right. Just click that subscribe button. Once you've subscribed, hit the notification bell, and that's free, okay? And I do appreciate you. If you click the join button, check this out. There are 3 different tiers here: Blue Cloud supporter, Blue Cloud trader, and Blue Cloud legend level member. You can support the channel by becoming a Blue Cloud supporter and request a stock or ETF be analyzed on the show. Blue Cloud trader, become a member here, and you'll be able to request stocks or ETFs to be analyzed on the show, and also exclusive member-only videos. These are done once a week, and I usually do them on the weekend, Saturday or Sunday, and basically I'll go over my entire portfolio in that video. All right. Blue Cloud Legend is the next level. You'll get all those perks, plus I have some recorded day trading videos that you can view, as well as daily trade updates. That's the key thing. And where do I post these daily trades that I place? Right next to the posts. Once you become a member, this is what you'll see. A new tab. It's called Membership tab. That you click on that and you'll be able to access it. And here's a list of all the member-only videos that I've posted in the past. There's a lot of them for months and months now, okay? Anyway, let's get back. By the way, and one more thing I would also ask is that you maybe check out some of my other links. At the top here, there's a section called 9 More Links. If you click on that, learn a little bit about me, scroll down, okay? There's a whole bunch of links here. Check them out. My X page, a $25 coupon for the TC2000 software that I use. You may want to check that one out. Patreon videos. Okay, thanks. Appreciate that. All right, let's get back now. GLD. Like I said, I'd be a little bit cautious here. This big red candle is concerning, especially when we've got a bearish engulfing pattern. All right, IBB, on the other hand, on the daily chart, looks pretty bullish today, up 0.50%. This is the Biotech Index Fund ETF. That's the daily chart, and here's the weekly. Also looking very good. These are some old trend lines here. So yeah, I like IBB. ABBV, which is AbbVie Inc. on the weekly chart, looks very bullish. Price is above the moving averages. The cloud is still very bullish here, the future cloud. By the way, that projects about 26. So as you can see here, that Senko Span A, you'll notice that it's actually projecting into the future. That's normal. It takes the midpoint of the 2 moving averages and projects that. The midpoint of that is the Senko Span A. And the Senko Span B is basically plotted by taking the midpoint of the last 52 periods. And then it's projected 26 periods into the future. So that's very unique, this indicator. So AbbVie, I like it on the weekly. Let's look at the daily chart. All right, so on the daily chart, it's currently under the moving averages. That's why it does not have a blue flag, okay? Let's go to the next one, APO. As you can see, it is currently under the cloud. That's very bearish. It's also under the 200-day moving average, that dotted yellow line. I'd stay out of that one. Aries Management, same thing, okay? Seems to be stalling here, but it's in bearish territory still. I'd stay out of that one. AZO is AutoZone. It's inside the cloud. Also looking pretty bearish. I would hold off on AZO. Let's take a look at BMNR. Now this is the stock that Tom Lee was appointed chairman of back on June 30th, 2025. The idea behind this one is pivoted to focus on building an Ethereum-centric treasury, aiming to become the MicroStrategy of Ethereum. And so, this one here has been stuck in this consolidation box for quite a while. I would hold off on this particular stock as well. Here's the daily chart and here's the weekly chart. Okay, and it really hasn't moved much. BX is Blackstone. This one on the weekly chart has pulled back into the Ichimoku cloud. That's not good. On the daily chart, it's under the cloud. So that's looking very bearish right now. I hold off on BX. ETH is Ethereum. The Ethereum Mini Trust ETF. The crypto. So basically right now it's down 1.04%. It's inside the cloud on the daily, and on the weekly chart, it's under the Tenkan-sen, the 9-period moving average for 2 weeks in a row. Volume is increasing. It doesn't look too bullish to me right now. Hold off on that one. FCX is Freeport McMoran. It's a basic material sector stock, copper, And basically this one here on the weekly chart has re-entered the cloud, but holding up above the 2 moving averages and the 200-day. So this one could potentially pop back above next week. But on the daily chart, yeah, I don't expect that to happen. Why? Because it's currently under the Ichimoku cloud. The Chiku span, you'll notice over here, is under price. That's bearish. The cloud itself, all right, actually it just turned bullish. The Senko span A just crossed back above Senko span B, but price is stuck under the cloud and in between these 2 moving averages. Hold off on that one, folks. FTAI, Aviation Limited, Steve Weiss made that his final trade today, but he did at least confirm that, hey, the technicals don't look good. And he's correct. The technicals do not look good. Do you see that little decline right there? It's in a downward channel right now, so I'd hold off. Here's another thing I would mention is the Tenkan-sen, the green line has the faster moving average. Tenkan-sen has crossed under the Kijun-sen. That's bearish. Here's another thing that's happened. The the ADX is moving up, and the negative DI is above the positive DI, so that's bearish as well. Hold off on that one, folks. HYG has emerged above the cloud, but it's as you can see, we still have a bearish crossover here of the moving averages. All right, on the daily chart. Let's look at the weekly chart. The weekly chart looks pretty good. It just popped above. This is called a bullish harami on the weekly chart. Okay, it's when you have a large red candle followed by a small bullish candle. Harami stands for pregnant because it's a small little body there. So, yeah, that's a bullish pattern. The fact that it closed above the Tenkan-sen is also very bullish. You can see over here the Chiku span is above price. The future cloud is bullish. What I don't like is down below here, the directional movement index is still negative. Okay, so be very cautious also with this one. That's the weekly chart, and here's the daily. Like I said, it's not ready yet because of the fact that the faster moving average is under this lower one. Okay, and that was, by the way, the iShares iBox High Yield Corporate Bond ETF. IBIT Bitcoin, talked about this 61.31 level yesterday and how price was staying above it, was finding support for a while. Even yesterday found support. Today it dropped 1.56%. Created a bullish candle though. This little spinning top here could potentially, and it's close to the 200-day moving average, we could see price pop back above on Monday. Would I be adding positions here? New positions? No. But if you're holding a position, this is not the right time to, let's say that you currently have a position in Bitcoin, I'd wait to see how price responds to, the 200-day moving average. Will it hold up above it? It could easily bounce right off of it. All right. Plus, Bitcoin is one of those things that typically is more of a holding type scenario. You want to have a small position and just kind of hold on to that. It's just an insurance policy, the way I look at it. Just in case the U.S. dollar completely collapses, you never know. It could happen. You'll be looking for other alternatives, right? Maybe that's why gold is also doing pretty good. I'm not saying that I'm not saying that the U.S. dollar is going to collapse, but it hasn't been looking particularly great recently. IonQ, right? IonQ was one of Bryn stocks that she closed her position in, and it's a good idea that she closed out of this one. Here it is in the daily chart. It got under the Tenkan-sen on Wednesday of this week, and since it closed under the Tenkan-sen, from that point right there, if we measure from here to this closing price, it's dropped about 13%. So it's a very volatile, high beta stock, and just as easily as it's had this big run, because it didn't, from the point where it broke above the Ichimoku cloud right here, where it made sense to get in, okay, it made a nice run to that high there, October 13th. It made a 92% run in 1.1 months. Now it's on the decline. Multiple days here, 1, 2, 3, 4 days in a row, closing under the Kijun-sen. The next level of support is probably going to be somewhere at that 54.74 level based on that prior high. So let's see let's measure that. It's about a 13.65% potential drop to that level. Okay. Now, it should also, I mean, it did seem to stall a little bit around this area here, this prior low. Let me just throw that right there. The 60.14, that prior low right there. Maybe it will bounce off of that level too. You never know. But I certainly wouldn't be adding positions here. Okay. JEF, Jefferies Financial. See, this is nothing positive happens when price gets under the cloud. You know, it generally just continues to drop like it did back here. Okay, in 2025, that was on February 11th of 2025. You can see that if I measure just from that point to that down to this low, that's a 44% drop in approximately 1.8 months. Okay. Once it got above the cloud over here, you can see that it made a nice move up, approximately 29% in 3.2 months. And then once it got back under, you know, everything started to go wrong. Everything starts with price getting, typically when price gets under the Tenkan-sen, you know, that's the first sign of weakness that you have to be really careful. All right. It can always bounce right back above. It closed under here, for example, and it bounced right back above. It got under the Tenkan-sen here, and it ended up coming back up, finding support at the Kijun-sen. But once you also get under the Kijun-sen, and then you have a negative crossover like this over here, it tends to continue. And you can see the drop from the closing price here to this low is about a 26%, a 26.8% drop in 22 days. It's not even like, you know, it's a pretty quick drop. Anyway, right now we got a bullish harami. Might this turn into something? Certainly, but I wouldn't take the risk. We're still in a downward channel here. KRE. Okay, we got a bullish harami on this one too, regional banking, but it's under the cloud, so I'd stay out of that one, folks. Main Street Capital, also under the cloud and under the moving averages, under the 200-day, stay out of that one. OWL, which is OWL is the ticker symbol for Blue Owl Capital Inc., also under the cloud. Look at that declining 200-day moving average, not good. And those are the stocks that they talked about on the show. Now we're going to take a look at Tesla, Apple, and Meta. Let's look at Tesla first. Tesla popped back above the Tenkan-sen here today. All right. So up 2.46%. That's the daily chart. Here's the weekly chart. We are still under this little trend line that I drew. We're still under the 488.54, the high there. We are approximately just about 9.8% away from the highs and approximately 6.2% away from this trend line. So I wouldn't be surprised to see it move up a little bit, but then it could potentially stall right around that level. That's the weekly chart, and here's the daily. Okay. The other thing I'm concerned about with this is the ADX itself is still dropping. So the momentum hasn't really started to pop back above, and the negative DI is still above positive DI. Apple looks a little more bullish. You can see the crossover here, the bullish crossover of the directional movement index, but the ADX is still dropping. The candle here closed above Tenkan-sen. That's good. It was up 1.96%. That's the daily chart, and here's the weekly. Looking pretty good, but we're just really close now to 260.10. That's the next level of resistance. It's only 3.4% away. You know, I don't know if I'd take that trade with such a limited potential gain. If it could certainly break through it, but I would want to see more evidence on that. Meta it was up 0.68%, but as you can see, it's under the moving average Tenkan-sen here. And that's the weekly chart. Here's a daily chart under the cloud. Stay out of that one, in my opinion. All right, and then we'll look at the strongest sectors here real quick. Not all of these, I already covered these yesterday, all of them. Silver, SLV dropped down 4.43%, but as you can see, it did stall at the Tenkan-sen, and then a little bit of buying happened at the end of the day. We can see that all if we switch it from a daily chart down to a 5-minute. So there's the 5-minute. So there's the big decline here. It just gapped down in the morning, right? Got under so there's the opening price, is that dotted green line, okay? The opening price right there. So that you see the gap that happened from Yesterday's close is the dotted red line. Okay. And it dropped, creating a lower high here from that high. And then basically what happened, so it dropped from there. It broke through that little level of support some more, and then moved up. Now, here's the thing. Silver did not take out this high on the 5-minute chart. Okay? So that's a problem. It did move up, creating a higher low from the prior low. So that's good. But we don't have a breakout yet above this level. So that's an ascending triangle pattern that's building, but we don't have a breakout on the 5-minute. So just be cautious with silver as well. You know, we'll see what happens on Monday. XLK, on this one here, we got negative DI above positive DI. It's also stalling. It's like that pennant type pattern that I was talking about earlier, right there. It's being squeezed. So we'll see what happens if it breaks through. Then expect it to continue to the upside. If it actually breaks to the lower part here under the Kijinsen, it's more likely to come back and retest the 270 level. All right, SMH is the daily chart. And this one too is also kind of consolidating right now. It's kind of stuck in this little box that you see right there. That's the semiconductor ETF. That's the daily chart, and here's the weekly. But I like this one because, of course, it's still holding up above the moving averages in the cloud. Negative DI is not looking good here. All right, it's above the positive DI. But otherwise, I like what I'm seeing. GLD. Now, this was the big down day for gold. Big volume bar here. Bearish engulfing pattern. We already talked about that. And down 1.88%. So just be cautious going into next week, especially if you have a huge exposure to gold. I'm not saying it's going to drop necessarily, but this is a sign of weakness. And it's maybe profit taking. And we never really know exactly when the end of the trend is, right? But it had a really nice bullish run here. How much further can it go? We're going to find out. Let's take a look at Robinhood. That was our members' request. And this one here, today, actually showed a little bit of bullishness. Even though it was down 1.16%, this candle is a bullish candle. It's, again, a spinning top. It's a reversal candle. So after a decline that you see right here, this might turn into something. It's got some potential. The last time I held Robinhood was back here. I closed my position on October 6th. And this was where the entry back on September 29th, I had a 22.1% profit in just that very short period of time. It's got a high beta, 3.51%, so it moves quite a bit. So I would be watching this candle like a hawk, basically, and I'd be watching to see how does it respond, basically. How does it respond to the low right there? Okay, the low is 125.60. Let's look at this on a 5-minute chart as well. So here's a 5-minute. The reason why I think this has some potential, it's interesting how that spinning top looks like on a 5-minute chart. So let's look at the 5-minute again. Here's a 5-minute. It as you can see, it almost kind of looks, like a inverse head and shoulders pattern. Here's the head, here's the shoulder, here's the other shoulder, and it looks like it broke that briefly right there on the 5-minute, but stayed under the closing price. That's that dotted red line I was talking about, and then showed some more weakness at the end of the day. So that's why you have to watch this one really closely. On the 5-minute, you can see it's still under that 200-day moving average too. Notice how it was respected multiple times here, right? On the daily chart, again, you get the Chico span is still above price. The cloud is still bullish. We still have a series of higher highs and higher lows on the daily chart and on the weekly chart. This is retesting maybe the Tenkan-sen, and we might get a bounce. Guys, that's going to do it for this video. Thank you for watching. I appreciate you for supporting the channel. And look out for the members only video over the weekend, and I'll catch you all in the next video.